Guys, this week, Elon Musk exercised more than 303 million Tesla stock options, increasing his voting control to nearly 20% of the company. At almost the exact same time, U.S. senators demanded a federal investigation into Tesla's full self-driving safety claims, arguing that the company's own methodology may be overstating how safe FSD really is. One story is about control, and one is about regulation, and both could determine where Tesla goes next. Guys, today we are going to break down Musk's massive options exercise, the growing FSD investigation, what the stock is actually doing, and finally, whether the options market is offering us a trade. The software we are going to be using today is TastyTrade and thinkorswim. I have links to the free downloads down in the description. So let's start with the headline that barely got the attention it deserved. Guys, on June 16th, Elon Musk exercised his entire 2018 Tesla compensation package. All of it. 303,960,630 stock options in a single transaction. The move was disclosed through an SEC Form 4 filing on June 17th. Now here's why that number matters. The strike price on those options was just $23.34 per share after stock split adjustments. Tesla was trading around 404 when Musk exercised. That's a gain of roughly $381 per share multiplied across more than 303 million shares. The result? Approximately 115 billion in paper gains. One transaction. One of the largest wealth creation events ever recorded in public markets. But the bigger story wasn't the money. It's the control. Tesla used a net share settlement structure, withholding roughly 17.5 million shares to cover the exercise costs. That means Musk didn't have to write a giant check. He simply walked away with hundreds of millions of additional Tesla shares. And then the obvious question emerged. Why now? He could have waited until August. That was the default exercise deadline under the agreement. Instead, he moved immediately. And the timing becomes far more interesting when you look at what happened just beforehand. Because SpaceX is now public, and for the first time, both Tesla and SpaceX have publicly traded equity. And this changes the game entirely, because now a stock-for-stock merger between the two companies becomes structurally possible in a way it never was before. Prediction markets have already begun assigning meaningful odds to a SpaceX-Tesla merger announcement before year end. The Motley Fool even ran a headline. Elon Musk just lifted his Tesla voting stake to nearly 20%. Could a SpaceX merger be next? Think about what that company would actually look like. Tesla, SpaceX, Starlink, Optimus, energy storage, full self-driving, XAI. You're talking about a technology conglomerate potentially approaching $4 trillion in value, spanning multiple industries simultaneously undergoing massive disruption. Would this happen? Nobody really knows, but here's what we do know. Musk exercised restricted shares he cannot immediately sell. This wasn't about taking profits, and it wasn't about increasing influence. Nearly 20% voting control gives Musk extraordinary power over any major Tesla corporate action, including a merger. That's the bull case. Now let's talk about the problem. On the exact same day Musk exercised those options, another headline hit. Senators Edward Markey and Richard Blumenthal sent a formal letter to the National Highway Traffic Safety Administration. Their demand? Investigate Tesla's full self-driving safety claims. NHTSA has until July 7th to respond. And when you read the allegations, you immediately understand why investors are paying attention. Tesla has repeatedly stated that FSD is 7 to 10 times safer than human drivers. The senators argue those claims rely on flawed and potentially misleading data practices. And this isn't happening in isolation. NHTSA already has an active investigation open. Back in October of 25, the agency launched a probe covering approximately 2.9 million Tesla vehicles equipped with FSD after reports involving 58 traffic violations, 14 crashes, and 23 injuries. That investigation remains active today. Europe is also showing signs of resistance regarding broader FSD deployment. So this is no longer just a US story. it's becoming a global regulatory issue. And that's important because autonomy is where a huge portion of Tesla's valuation premium comes from. The robo-taxi narrative, the autonomous driving narrative, the future software revenue narrative. All of it depends on regulators allowing broader deployment. So where does Tesla actually sit today? I mean, if we pull up the chart, we can see that Tesla's trading around $406. We've had a nice green candle right here. Looks like we broke through the 50-day moving average and are approaching the 200-day. But the stock is down roughly 20% year to date from its all-time high right around $499. So right now, Tesla sits almost directly in the middle of its range of $499 all the way down to $288. That means overhead resistance continues to dominate the chart. You know, the RSI is right around 40, not oversold, not washed out. I mean, we still have room for downside before reaching extreme conditions, right? There's a lot of things that make this chart look like it could go either way. So how do we trade this thing, right? So if we open up TastyTrade, you can see Tesla has an IV rank of 35.1, which is slightly elevated. Anything over 30, we say is elevated enough in order to sell some premium on it. We also then go down and look at Tesla has earnings on July 22nd, which is just about exactly a month from right now. So I really don't want to trade Tesla over earnings, so I'm going to go ahead and look at the July 17th options. And to start, like I always do, I just throw on a strangle and see what we got here. So it looks like the one standard deviation is at a 10 delta at 350, with the expected move being just above 370 right here. So that means we're $20 outside the expected move to the put side. As far as the call goes, a 460 call is a 17 delta. If we want to be completely delta neutral, we can go all the way up to a 10 delta, which would be 480, which puts us $35 out of the expected move. And we can collect $4.87 on this trade, or almost 1%, a little over 1% of the underlying value of the stock for a 25-day trade. That looks pretty good. So now let's go take a look at the chart, see what a 350, 480 strangle looks like, and if we're going to put this thing on. So we've got Tesla. We said we were going to trade a 350, 480 strangle. So we're going to put this to 350. I put my price levels on here. So this one is almost down to the swing low. This swing low is at 338. We're right there. So that'll give us a little bit of nice support if we happen to come to the downside. Into the call side, we're going 480. Let's see where this puts us. Just above these two swing highs back in November and just below the all-time high of 499. So guys, as a trade that is going to expire in 25 days, right? We're not going over earnings. And we have basically almost exactly between the all-time high and this most recent swing low. This looks like a trade that is a very low risk, high reward type of trade. And this is not financial advice. I'm not a financial advisor. I'm just analyzing the numbers and presenting you with options on what I might do. So for me, this looks like a decent trade. If you have enough buying power in your account, a 350, 480 strangle looks like a great trade to put on. And what am I going to do if I put this on? I'm not going to hold it all the way to expiration. I'm going to try and make 50 to 75 bucks, get in, get out, close the trade, and move on, because there are literally hundreds of different trades you can make every single day. So guys, Elon Musk just consolidated nearly 20% voting control of Tesla through one of the largest options exercises ever recorded. The timing immediately after SpaceX's public debut has reignited merger speculation and created a new bullish narrative for the stock. At the same time, Washington is challenging the foundation of Tesla's full self-driving safety claims. If regulators escalate scrutiny after the July 7th deadline, that directly threatens the autonomy premium embedded in Tesla's valuation. Meanwhile, the chart is technically weak, but I'm playing both sides with the naked strangle. So I'm really assuming that the FSD safety claims and the investigation are going to kind of suppress the upside, but people think they might be overblown, so we're not going to completely sell off, and this strangle is going to work out for our advantage. Guys, if you found this helpful, make sure you hit like, hit subscribe, leave me a comment. What type of trade are you looking at? My name is Luke, and this is the Option Bomb, and I'll see you in the next one.